Art is of interest to many investors, but the art market differs significantly from the financial markets. So I first want to begin by looking at how different the two markets are. Firstly, art is entirely different to traditional assets like equities or bonds, and it requires highly specialized expertise. Individuals really need to educate themselves thoroughly or risk making poor investments or acquisition choices. This is why the art market can regularly feel like an elite market. Quite often, it's only those who've had access to arts from a young age or the opportunity to learn about it who are able to participate. Traditionally, items are sold by specialist retailers with very specific knowledge to a wealthy and connected consumer base. It's in this way that the market is able to maintain high values and encourage our view as art as the ultimate luxury consumer good. Art also differs from financial investments because it does not offer any monetary dividends. There are only the significant psychological and cultural dividends of enjoying and owning a work of art. Similarly, art does not have any long-term equilibrium price. The fundamental value of a financial asset is known. It's the present value of the expected flow of income. Art, meanwhile, has no long-term equilibrium price, which can cause volatility in the market. Next, while stock and bond prices constantly adjust to reflect new information in the financial markets, this is not the case in the art market. While individuals can see new and relevant auction prices each season, the individual is required to do their own homework and seek out their own information as research. Insider information actually allows individuals to profit, which is quite the opposite from the financial markets. Those without this privileged access are at a significant disadvantage. There isn't a level playing field necessarily in the art market. Liquidity is also a major concern. The art market is extremely illiquid, save for the top-tier artists that regularly appear at auction and that have a consistently strong demand. This accounts for a fraction of the goods in the market, and for most items, there is a limited pool of potential buyers. By contrast, stock investors can quickly and efficiently sell company shares with relative ease. Another difference between the art market and financial markets is that prices within the art market can react significantly to somewhat arbitrary changes in taste. This can cause volatility, unexpected patterns, and sudden trends that are very difficult to predict. Another thing that the financial markets do not have to factor in is the holding and transaction costs for art, such as storage, insurance, shipping, and transportation. And these are often not built into the final price and can be very high. They might not also be factored into a long-term consideration when purchasing or acquiring works of art or building a collection. And finally, unlike stocks or bonds, each work of art is unique. This makes it particularly hard to predict trends and patterns and very difficult to look ahead when investing in art.